Hello, everyone, and welcome back to this Family Building Society podcast series all about expat mortgages. In previous episodes, we looked at the key trends in the expat mortgage market and did a deep dive into the expat buy-to-let market. And if you haven't seen those episodes, the links will be provided in the accompanying story. But in this session, we're going to look ahead to see where the key opportunities and challenges are for the expat mortgage market going forward. And we will look at owner, occupier and buy-to-let areas of the market, potential lender landscape, and challenges and opportunities in the near term. So my name is Anna Sagar. I'm Deputy Editor for Mortgage Solutions, and I'm joined by Paul Roberts, Senior Account Director for Yorkshire and Lancashire at Family Building Society, and Nathan Waller, Business Development Manager for East Anglia. Welcome both. Okay, so we've touched on a lot of these themes in our previous episodes, but just to kind of recap, there's been some growth in the expat mortgage market, both on the residential side and in the buy-to-let side. But looking ahead, do you kind of expect this momentum to continue, Paul, or are there specific areas that you think will grow more, I guess?
I think, as we were talking about in the previous episode, Anna, the growth areas for me, I see as they have in the UK grown, is the limited company side of the expat market. I think you look at the number of people who are leaving and going to perhaps work abroad, retire, go abroad. I just don't think that's going to change. It may actually speed up a little bit with some of the opportunities that there are. You may see some reduction perhaps in just what we would perhaps call accidental landlord, where people decide not to keep the property in the UK when they do move abroad, just because of the changing landscape with the Renters' Rights Bill, etc. But overall, personally, based on the inquiries I'm seeing, definitely an increase at this moment in time. And the fact the Renters' Rights Bill's going through doesn't seem to be putting people off.
Nathan, do you have anything to add to that? Do you kind of expect the expat momentum to continue? And what would your growth areas be if you had to single some out?
I think the growth areas are very similar to what Paul's probably saying. But where people are moving out a little bit earlier, as we've talked about in the past, it's not just retirees now that are at the end of their working life and going and living and living abroad. There is an increase in those that are leaving earlier, maybe for job prospects, maybe for it being a little bit cheaper to live there, or they just want to go and enjoy life as soon as they can and maybe keep a bolt hole in the UK, either on a residential basis, because we see that, where somebody does want to keep a property in the UK for either them or for their family to live in, sometimes even for their mum or dad or something. It's nice for them to have a house that they can come back with and go straight and see the family. What I would imagine we probably will see is where people are going earlier, you might then start seeing people come back earlier as well, where they've actually go abroad and go, actually, you know what? Not necessarily for me, or I've done what I've wanted to. I've ticked it off the bucket list, and actually now I actually love living back in the UK. I'm coming back here. So we might see a bit of a return, as we do sometimes see that fairly regularly for expats that have retired, gone abroad, and actually when they get that little bit older, want to come back and see the grandkids and want to move back to the UK. So we are happy to look at those customers that may not have a live UK mortgage credit profile. They're selling in France and coming back to the UK, but they've got good pensions that they can do a mortgage for, because depending where they've gone to, it might have been cheaper property there as well. So actually they're moving from a cheaper country back to a slightly more expensive one, so they need a mortgage when they come back. Or those again who have been abroad for a while, maybe have put it onto a buy-to-let, want to come back to the UK, and some lenders might be a little bit more restrictive about how soon they can look to take them, whereas we can look at it that little bit earlier. So yes, I think probably the biggest area of growth will probably still be the buy-to-let and within the limited company space, but I still think you will see a natural increase in the residential side as well, because of what people are doing when they come to movements in regards to different areas. So I think biggest area buy-to-let, but there will be an increased trend for the residential, I think, as well.
I think it's interesting the point you made about returning expats and how, yes, they're moving out earlier, but that means they might move back earlier. And I suppose as a lender, what are you kind of mentioned they don't have a live UK mortgage profile, or they don't have the live UK credit profile. So what are the things that as a lender that you're looking at, and if that kind of customer came across your desk, what would you need from brokers with those kinds of cases?
For us, the main thing will be looking at their credit conduct abroad, so in regards to bank statements, so like you would normally for a UK, because we don't credit score, we credit check. So there'll be a couple of things we need to understand. Normally they'll have a correspondence address in the UK. They've normally kept something there for maybe a bank account over here or a credit card, or maybe they've got the buy to let at the moment, and actually we would want them to have a correspondence address here in the UK, so we can check that. We can check where they were living before and see if we can find anything in their credit profile. But then it's looking at their current bank accounts of what can we see. Can we see them managing everything on time? There's no missed payments, no bounce payments, because again, it's a higher risk. So we've got to be a bit more cautious, but ultimately, as long as we can be comfortable with it, because we're not using a computer says yes or no, which most of the high street will be doing, and if they can't find them on a credit profile, it's, oh, we won't lend to them. It's right. Let's talk. Let's understand what you've been doing. Let's see what we can get. Because worst case, instead of 3 months, we can always ask for a few more months bank statements if we really need to, just to be comfortable. And then we can look at the previous address. So again, it's looking at that client's individual circumstances. So we're comfortable with doing that. So they're the types of things we would need.
It sounds like you're just taking a more holistic approach rather than that computer says no or yes kind of scenario. And we kind of we've touched on areas of opportunity, but I think like looking at potential challenges, Paul, I'll go to you first. What would you say is like potential headwinds that brokers might need to be aware of with their expat customers kind of looking ahead?
Should we wait till the end of November, Anna, for where that's going? Look, the headwinds are always whatever's going on in the UK mortgage market. I think certainly the expat residential clients I'm seeing, that the main headwind is always keeping an eye on what the exchange rate's doing in terms of how that's going to affect affordability, etc. And I think as a lender, you're constantly having to evolve your thought processes around, well, what are we going to stress test it at? How harsh are we going to stress test it at? And just the general UK property market. And it's at the moment, the supply and demand is driving property prices still upwards at this moment in time in most areas. But you only have to look at perhaps what's happening in London at the moment. Prices are under a little bit more pressure, especially at the higher end of the market, because of the challenges that may come from the budget. As lenders, we're obviously trying to balance that out all the time.
Nathan, is there anything that you want to add to that in terms of potential headwinds or challenges that brokers should be aware of?
We try as a lender to keep on top of things as much as we possibly can. So we do review our countries on a regular basis, looking at a couple of different indices as to what countries we should and shouldn't be considering. And again, that's why we utilize the packager connections as well for some of those countries that are deemed as a slightly higher risk for looking at them. So again, trying to be careful about who we're lending to. But I think again, making sure that from a broker's perspective, they're aware of the customer, who they are, what they're doing, also making sure that they're complying with their own kind of networks compliance and things like that as well, and making sure that they are doing their due diligence. There's a little bit of an enhanced due diligence really for a broker to consider if you are dealing with a country abroad. And also it's a bit of as our expat specialists will adhere to, if you start doing well in the expat market, you'll get some good referrals. But don't forget, there's a bit of a time difference, so you might have to have some early wakes from time to time with a couple of extra coffees to deal with them as well, where there's that disparity in time.
I suppose if you have a customer in Australia, then you might just have to adjust your timings accordingly. And I think another key element of for that brokers might be interested in is about pricing and also product availability. So is there it's very hard to look in a crystal ball to see what's going to happen with interest rates and with mortgage pricing generally, but do you kind of expect there to be a downward trend in pricing?
Yes. Ultimately, an expat case is slightly riskier, bearing in mind you are dealing with a customer that is in a different country. So it's trickier to do a risk assessment on them. So again, you can't necessarily get all the information from a credit search than you would for someone potentially in the UK. Ultimately, what you'll tend to find from us is we'll be priced ever so slightly more for this type of thing because it's a risky business, and you would probably see As rates do go down on standard business, you would likely see it drop down for the expat side. Ultimately, from a lender, we need to be relatively competitive. So we need to look at the whole of the market and where we're placed. But you will generally see that, yes, there is a higher risk. There's an element of that, and it is always built into the product. But as rates do go down, you will likely see the expat rates drop down as well.
Paul, anything to add on kind of pricing and product availability? I've noticed that there are some lenders that have entered the market or like bringing out new products. Do you kind of expect that to continue in this might be an area of growth for lenders?
It's a tricky one, really, because you do speak to other lenders as a account manager on a fairly regular basis, and it always surprises me that some lenders aren't in this space. But again, I think the classic example, as Nathan's already talked about, is we don't credit score our clients. We look at each case on an individual and a holistic basis. The minute you start credit scoring, it will have some impact on whether those clients are deemed the right risk level. So I think the fact that we don't, and a number of other lenders don't, especially the smaller building, it comes back to what we've talked about in some of the other podcasts we've done. Often the smaller building societies are a little bit trailblazing in some of these areas, because we can look very much on each case on an individual basis rather than using a computer model to decide what to do. I think in terms of pricing, again, this is where the building society bit does come in. It's the cost of retail funds. It's the cost of bringing that money in through our depositors. And that is always a tricky one at this moment in time to then put the rates out. You've just seen us reduce rates ever so slightly at the higher loan to values, which is great news. I go back to what I've just said earlier. We wait and see what the end of November brings as to where rates may go down. The Bank of England didn't move rates this time. They may do it in December after the budget this time. Inflation looks under relative control at this moment. It's a little bit over where it needs to be, but it's not ridiculously high. So fingers crossed is the honest answer on that.
It's just another point I wanted to ask about refinancing, because I think we've seen this just across the mortgage market generally, people coming off lower rates and then coming on to higher rates. How is that kind of something also impacting the expat market, or with the more holistic approach that's sort of able to be managed?
I think from my perspective, again, this is where sometimes the north-south divide between clients. Certainly up here, we've seen rents continue to grow at a reasonably quick pace. So whilst clients might have come off, say, 4% fixed rates and moving to a 5% fixed rate, the fact that their rental yield has gone up by 8, 9, 10, 15, 20%, whatever it might be, has effectively offset some of that. Yes, there are some other costs. Where I think it perhaps is a little bit more difficult is in the 2-year market, where the stress testing is obviously slightly different compared to 5-year, and rents certainly in the south haven't had the same growth that they perhaps had in the north.
Where we've been in this higher rate market for a relatively reasonably long period of time now, it has become a little bit more the norm, where I think those that struggled the most were those customers that were just on the cusp of, they'd had a really, really cheap rate, and then it was a couple of months after everything all went horribly, horribly wrong. At which point, everyone just assumed that it was just going to be a short little blip. At that point, that was what was in the press. Oh, don't worry, I'll be fine in another 6 months or something like that. And then people were beginning, I think we saw it just in our mortgage business as a whole, not just the expat side, but people held off that little bit because they were like, oh, well, yeah, it's gone up a little bit. You know what? I'm going to hold on for a little bit. And then the longer that higher rate kind of market continued, the more people go, right, I need to make some changes. I need to make some decisions. It might be, well, this buy-to-let property that I've got down in the south isn't worth it. I'm getting rid of it. Right. Therefore, I'm going to sell that, take the equity, and I'm going to buy another property further up the country, or maybe buy 2, or just walk away from it entirely. The residential market we have the ability for on an expat resi for it to be on interest only. So some of those as well, because we can change the monthly payments a little bit, so it's not quite as painful from going from a low rate to a higher to the higher rate. So interest only works quite nicely for that as well. But because we've been in this market for quite a relatively long period, it's now the norm and people are expecting it, and rents have increased. People have thought ahead. Maybe we've seen I know I've seen a few of them for some of the expat cases as well, where they've had some surplus income or some surplus savings that was going, and they're just paying down some of the mortgage debt and going, well, actually, it doesn't fit. I don't want a 5-year. I would rather a 2-year, because they think, well, maybe rates will go down again in the future, right? Well, I did have some spare money. I'm paying some of that mortgage down, going on a 2-year, and then rolling the dice to see what happens. You've also seen, I mean, we're not the lender that tends to do that. We're relatively good with being reasonable with our fees for expats. So it's a 1% product fee. You have seen other lenders maybe go down the lower rate, higher fee scale to try and provide a solution for different clients. But again, you've got to look at overall what's the best thing for them. Is it whacking on a 5 or 7% fee onto their mortgage, or is it actually paying some of that mortgage down and taking a lower fee? So again, there's a lot of challenges, but we'll just have to wait and see how how it goes.
Unfortunately, we are running short on time. So, just to round up very quickly, if you had a broker in front of you, what would your the key point from this episode be? I'll go to Paul first.
I think not just this episode, Anna, but all 3 episodes is effectively, if you're relatively new into the expat market, talk to us and also talk to our packaging partners. If you're experienced, by all means, talk directly to us. But we're here to help. There are lots of options for you, and we'll look after your expat clients as well as your UK clients.
There are options there for them. It's about doing the right thing for the customer and the right product for them. So sit down, have a good conversation, look at all the different options that they could potentially have. Give us a call, and don't be scared. Like, there are products out there available for them, and just because they're living in a different country doesn't mean that that you can't help them. So give us a shout, and I'm sure we'll be able to help guide you in the right direction.
Well, that's a good note to end on. Thank you both for all your insights over the past 3 episodes. And yeah, all the links to all the episodes will be found in the corresponding stories. And thank you so much for joining us.